On August 19th, Unitree listed on the SciTech Innovation Board, becoming the first humanoid robotics company to go public in China's A-share market. The company's IPO price was RMB 150.8 per share, with an offering market capitalization of approximately RMB 60.993 billion and expected proceeds of RMB 6.1 billion. Shares surged 629.44% on their trading debut, with the stock price reaching RMB 1,100, pushing total market capitalization to RMB 444.9 billion. Compared with a roughly RMB 13.33 million valuation at the company's seed round, that represents an increase of about 33,375 times over 10 years. Following the listing, founder Wang Xingxing directly holds a 21.44% stake in the company, with voting control capped at 65.3%. Based on the opening day market cap, Wang's personal net worth reached RMB 93.4 billion. Since its founding in 2016, Unitree has completed multiple funding rounds over the past decade, backed not only by internet giants such as Meituan, Tencent, Alibaba, and Ant Group, but also by leading venture capital firms including Hongshan, Matrix Partners China, and Source Code Capital, along with several national and local level state-owned funds, a lineup of investors that reflects the strength of its shareholder base. Of course, not every investor who had a chance to back Unitree ended up doing so. A fund under drone maker DJI reportedly had the opportunity to participate in a 2018 capital raise for Unitree, but ultimately did not follow through. Media estimates suggest that had the DJI's roughly RMB 10.12 million investment been held onto through the IPO, the resulting equity stake would now be worth more than 3.5 billion RMB. Meaning, based on the opening price, the fund missed out on gains of over 25 billion RMB. In 2017, Tim Jiangchuan, founding managing partner of Chexing Capital, spoke at length with Wang Xingxing, but ultimately decided not to invest, writing just 4 words in his internal notes: grassroots background. 3 years later, Chexing Capital came back in at a valuation more than 4 times higher than before. He later attributed his original misjudgment to what he called his own elitist arrogance. Huang Yonggang, managing partner of Yuanba Ludong, an early-stage venture fund under Source Code Capital, told the Fourth Wave that Unitree's listing reflects the market's recognition of the company's core competitiveness and marks an important starting point for China's embodied AI sector. I believe that, with the support of the capital markets, Unitree will go on to create value in more real-world scenarios. It's been an honor to accompany Unitree to where it is today during this critical stage of its development, he said. Source Code Capital first participated in Unitree's series B2 round in early 2024 and has followed on in 3 consecutive rounds since. Before the IPO, Source Code Capital held a 2.6% stake in Unitree, which was diluted to 2.34% after the listing, still making it a major outside institutional shareholder. According to a Source Code Capital representative, investing in Unitree in 2024 was not a deal that institutions were competing to get into at the time. Back then, Unitree was still in a phase of repeated testing and troubleshooting in real-world settings. Humanoid robots hadn't yet become a market consensus, and even the commercial prospects for quadruped robots were still up for debate. Still, Wang Xingxing's first impression left a deep mark. What stood out most was the way he talked about the product. Give him any small detail, and he could talk about it endlessly. When he talked about the product, his eyes would light up. That kind of immersion and intensity was contagious for whoever sat across from him. At the time, the capital markets held a lot of skepticism toward quadruped robots. Investors commonly ask questions like, is this really a viable industry direction, or just a technology demo? Can the product actually be mass-produced? Is there genuine demand? Many robotics companies had strong technology, but weak productization. Some were good at demos, but struggled to deliver consistently, while others relied on high prices and small batch orders, making it hard to build a broader market. Shenzhen Capital Group first invested in Unitree's Series B round in 2022 and later added to its position. Following the IPO, it holds a combined 2.3% stake in the company. In the view of Shenzhen Capital Group's team, Unitree's strength lies not in any single technology, but in its comparatively complete engineering capability. What's more, the company's pace of technical iteration has been fast. Its shift from quadruped to humanoid robots wasn't simply a change in product form, but the result of accumulated capabilities spilling over from motion control, hardware platforms, algorithms, supply chain systems, and product definition. When evaluating embodied intelligence projects, Shenzhen Capital Group weighs a combination of team capability, path to commercialization, and global potential. If a team only excels at one particular technical point, it won't be able to reach mass production. Unitree started with quadruped robots, first building product and brand recognition, before gradually expanding into embodied intelligence and humanoid robots. That path has a certain continuity to it. And robotics is a global industry. If a Chinese company only serves the domestic market, its value potential will be limited. Unitree has shown the ability to compete globally on cost control, product reusability, and the speed of engineering iteration. In the 3 years from 2023 to 2025, Unitree's revenue came in at RMB 159 million, 393 million RMB, and RMB 1.699 billion, respectively, a 3-year compound annual growth rate of 226.78%. Net profit over the same 3 years, excluding non-recurring items, was RMB minus 18 million, 78 million RMB, and RMB 591 million. The company turned profitable for the first time in 2024, and in 2025, its revenue growth rate reached 332.64%. In the first half of 2026, Unitree generated revenue of RMB 1.152 billion, up 48.54% year-over-year. On industry competition, Unitree outed in its listing filings that once Tesla's Optimus Gen 3 humanoid robot reaches commercial mass production, it will compete directly with Unitree and other robotics makers. In addition, several Chinese automakers and consumer electronics companies have already moved into the humanoid robot business, bringing advantages in resource investment, market promotion, and manufacturing experience. As their products enter the market, Unitree may face pressure on pricing, market share, and profit margins. Unitree also said that if it fails to maintain a technological edge amid competition, combined with cooling short-term demand for robot rentals, the selling price of its products could decline. On globalization, Unitree said that overseas revenue has consistently accounted for more than 40% of its total, a relatively high proportion. However, the company acknowledged that, unless it obtains specific exemptions or conditional approvals, future new robot models it develops may be unable to be sold in the US market, which could even lead to a decline in performance. Shenzhen Capital Group said that Unitree's smooth path to the capital markets shows that high-tech, capital-intensive, long-cycle industries like robotics are gaining access to a more mature capital absorption mechanism, something meaningful for companies, investment institutions, and the broader hard-tech ecosystem as a whole. But an IPO is not the endpoint for investment. For hard-tech companies, going public is just a new stage. What matters is whether they can keep innovating, keep commercializing, and keep competing globally. Unitree said the funds raised in this listing will go toward continued R&D investment in embodied large models. Following the IPO, the market is now reassessing the company under a new set of valuations and expectations. For more in-depth coverage of robotics and hard tech, follow the Fort Web on WeChat and video account. See you next episode. Disclaimer: the content and views expressed in this article are for reference only and do not constitute investment advice. Investing involves risk. Caution is advised when entering the market.